That's right.
Right, welcome everyone to the first of our meeting for this cycle. Might need to bear with me, I've not shared council meeting, I've been on training yet. I got my able assistant beside me to nudge me as and when required. Certain items I think will be for information, certain items will be for agreement. So just introductions, we'll do introductions to officers, item 3, but there's some protocols really. Please switch off your mobiles, I've got on silent. There's no members of the public here, is there, or press? No proof. It's being recorded and we'll be available on YouTube shortly. Can those people online hear me?
Yes, Chair, good evening. I can hear you.
Yeah.
Got this broken West Country accent that I left for 14 years, so it's a bit mixed up. Reminder of councillors and those present to shore attending virtually and in person, you can hear the proceedings. Oh, good. Speak clearly. I'm probably the worst person for that, so correct me if it gets through. There will be times. It's a formal meeting, so where possible, use our titles. If this fire alarm sounds, officers will direct us to the nearest exit from the building. And I assume you all know where the store is. All right. Don, any questions for me?
No, not sure. Obviously, there's no fire drill plan.
No, okay, got you.
If the fire alarm does go off, we just need to go into the car park.
Any questions?
Someone else.
Yes, yes. Walking, not running. So, apologies for absence.
I've received apologies from councillors Quinn and Stevenson, Chair.
Thank you. To approve as correct, I record the minutes of the meeting held on 27th of March, ages 7 to 14. I appreciate only councillor Walker was in attendance.
I'll move the Chair.
I mean, we can second. Oh, yes, and with
But
the
I'm
amendment,
allowed to second them even though I wasn't there.
I believe you are.
Trust in councillors Walker's scrutiny of those minutes.
And
So performance.
so, and we got a stone estate, I think it was, should we,
There's a,
Peter Barber?
yes, sorry, Peter, I added you to the previous minutes as Paul. So it's with that amendment, councillor Walker, that you're happy.
Happy.
So, councillor Walker, opposed, councillor Bushels, second, all in favour? Thank you. No. Good. Right, any declarations of interest?
I've received none, Chair.
No? Good. And this is a formality really, to agree the agenda between part A and part B. Do we need a vote for that or just no? Good thing to do. So moving on to part A, agenda item 6. And that's report by Devon Audit Partnership. Actually, I missed that introductions. Sorry, yeah. Can we just go around the room, just saying who we are and perhaps councillors which wards they represent and the officers. I'm not sure where to start.
Do you want to start at your
Yes,
Chair and go around?
yes.
Councillor Orange and Barnstable Recruiting Ward.
Ken by
I think I'll
Orange.
check that.
John Phillips, Director of Resources and Deputy Chief Exec.
Tate, Head of Governance. Paul McGrath from the Devon Audit Partnership, I'm your audit manager.
And Rose, Head of Devon Audit Partnership.
Mark Haworth Booth, Lankey Ward.
Councillor Matthew Bushell, South Malton Ward.
Peter Jones, Woodbridge.
Alan Walker from Bickerton. Sue Whitehead from Chittlehampton.
Acting South West Team Manager.
Sarah Higgins, Head of Customer Focus.
Some for the senior solicitor and monitoring officer.
Chris Norman, Chair, and Phil Tolstock.
Kate Nelson Clark.
So back to number 6, report on internal audit. Devon Audit Partnership. We want to give a overview, please.
Yeah, so Paul McGrath from DAP. So as you can see, this is our report for the last financial year, 22-23. And that this will help to inform your annual government statement. I won't go through it in detail. I'll just highlight the, I suppose the important areas of interest. So, page 17, this is our opinion statement. As you can see, we're going for a reasonable assurance statement. This is also compared to the other three possible opinions that we could have provided. For context, most assurance opinions we provide tend to be reasonable. So you're within that area. The table on the left provides our thoughts on the areas related to the control framework, risk management, governance arrangements, and performance management. So it obviously highlights the improvements to governance that you've made, and also risk management, but offers highlights that further work is needed on performance management. Page 18, that provides a picture of the actual audits and assurance opinions we've provided by each service area. So you can see we've sort of a collection of substantial, reasonable, and limited by each service area. And then the following page, so page 19, the pie chart shows those assurances for North Devon as a whole. But the text to the left of the pie chart sort of highlights the sort of 4 limited assurance areas that we reported on, and the main concerns that were about them. And of course, we'll be doing work on all of those areas in this current financial year to confirm that they're being addressed. From page 22, so past members will know that we present audit summaries of our work for each audit committee, of the work we've done up to date. So this is a collection of all the audits that we delivered since the March 23 audit committee. That's these are summaries. So just broadly going through from treasury management, as you can see, we provide a substantial and minor points of concern there. The council has got a low risk appetite towards investments, and obviously the increase in interest rates will help to raise the proceeds from its investments. Risk management. So again, we looked at risk management, and we note the progress being made to update the risk management framework. We've now got a far more manageable number of corporate risks, for instance, and the good work of the corporate risk management group to sort of discuss risks and seek mitigating action and so on. Next report on contract management again. So we note that a lot more priority being put on contract management, including the new leisure centre contracts, and we also contain some comments on the contracts management theatre. So again, made quite a few recommendations about ensuring that we have regular meetings with the contractor and you ensure that the performance is good. And we also make a suggestion about perhaps one way of prioritising your contracts is to have a sort of gold, silver, or bronze approach to so that you're sort of highlighting these are gold contracts that we need to really monitor them closely, as opposed to perhaps silver and bronze. Also contains mention on the cyber security and the information governance, and not a lot of detail in there, but we're talking about those reports later in the meeting. And then from page 26, so this is where we have our assurance map, and members will be may recall the training we did, and we talked about 3 lines of defence. So that is sort of our assessment of the North Devon 3 lines of defence. And the picture on pages 28 and 29 provides the sort of visual picture for each audit. So you can look at it horizontally for each audit area, but also you can look to identify trends when you go down the page, such as on performance management and other areas. And we've sort of identified some areas for you to focus on, such as, performance management and strategies and business plans and core IT systems based upon that analysis. And then I just like to highlight page 33, which details the good customer satisfaction scores that we get. So for each audit, we send requests out to the business area to rate us in our delivery. And again, well, thanks for North Devon for responding, because I know in other areas we've struggled getting scores and quick feedback from councils, but we've had a good return. So that's a quick canter through the report. Happy to take any questions or comments.
Any questions?
Could you go into greater detail about how we might ensure the work is being done correctly by the contractors in theatres? I guess that you're talking about a company that runs them for us.
Yeah, so obviously it's a fairly new contract. We know management is putting in place, for instance, quarterly meetings with the contractor where they go through the performance. There's an annual report that the contractor is producing. And I know the sort of business area is drawing out some sort of key performance indicators to confirm, how progress is. You're looking at number of people visiting and number of performances, and then looking at financial aspects and costs, costs that occur and so on. So, as I said, based upon those discussions, you'll see that there's a lot more focus on closer management of contracts.
Because I do believe that recently they came to us and they asked for greater financial support, which I'm sure John will come back to us. How do we manage that sort of thing? Because we can't anticipate their asks, so everybody wants money. That's why the risk was managed by getting an external company to run the theatres. How can we protect against that sort of thing?
Is that something we can take aside this and perhaps discuss it in more detail? What's more appropriate?
Yeah, obviously we had the visit, obviously, of Senegal and their management to full council a couple of meetings ago. Obviously, their strategy moving forwards obviously was set out, and as Collins has outlined, we do meet with them quarterly. So ahead of those property regeneration meets with the team, scrutinise the performance of things, what's in the contract, to make sure that we are working closely with them. Obviously, every theatre company, no doubt, will be asking councils for more financial support. We do give them financial support, and obviously we've been monitoring that moving forward in terms of their asks and making sure the outcomes from the theatre are in line with what our expectations are. That'll be a balancing act, but obviously members are quite rightly, if they want to see how that is performing, they could receive further updates at either a full council meeting or effectively a resorted meeting.
Let's just add to that, Chair, as well. As the Bishop responds to a specific query about the funding, what prevents them coming forward to us and asking for additional funding. The report highlights, I think it says it's really about the work that we do with the contractor about seeking additional funding, external funding through Arts Council and other bodies as well. And that helps to protect that situation. If we can make sure that they're profitable, then that prevents them coming to us. And we adopt exactly the same approach with the leisure contractor as well. Work quite closely with them to secure that additional extra funding from external sources to make sure that the risk of them approaching us is reduced.
Thank you.
And also, so for those challenging your people about, have you looked at the most recent company accounts of the company and what's their awareness of, the company's making a profit or loss, or so they need to be aware of that aspect as well.
Yeah.
It's certainly scrutinised how the company structure was formed to provide assets and liabilities. And I guess that's something that you took on board as well, because the restructuring that their company could have and that on to the success of our theatres in particular.
Okay, any other comments? Thanks for I found it very useful to read. I like colours, even not really reds. I think we're covering the OT one later, right? But it's lots of greens, which is reassuring. It's reassuring for you to get the positive feedback from the officers. So let's just note this, okay, so we can move on. So item 7, external audit plan. That's
Yeah, so you got Peter Barber from
Yeah.
to introduce this item.
thank you, sir.
Yeah, thank you, Chair. Good evening, committee. I'm conscious a number of you are new to this committee, but some of you may have been in attendance at the training in late May in Bideford. But either way, my name is Pete Barber, and I'm your external auditor for 22-23. And I'm joined today by my colleague Ros Appley, who is your new audit manager for 22-23. I will ask Ros to just say a few words and introduce herself, and then I will, with your permission, Chair, take you through the 22-23 audit plan, which is item 7 on your agenda. So just briefly over to Ros, if I may.
Hi everyone, lovely to meet you, albeit virtually. I'm sure I'll see a lot more of these faces over the kind of coming months. Yeah, I have previously worked on North Devon District Council as the in-charge auditor, and I'm coming in this year as manager on the job. So I look forward to working with you all at North Devon again, and I'll hand back over to Pete.
Thank you, Ross.
Thank you, Ros. So as I said, item 7 is our audit plan for 22-23, which sets out our approach to discharging our responsibilities. And just to remind members of this committee, as external auditors, our responsibilities are twofold. It's an opinion on your financial statements, and it's a value for money conclusion. The plan is actually very similar to previous years, and I'm conscious it runs to some 27 pages, so I will take it as read, but I will go through it and draw out the key messages. So if I start with the opinion, importantly, audit is a retrospective exercise. So yes, we do planning, and yes, we do interim work, and that informs the plan, but the majority of the assurances that we get over your accounts every year is through substantive work, so basically testing the numbers, and that is done following receipt of the draft accounts. And for this year, the deadline for producing draft accounts has been brought forward by government, and the deadline was the end of May. And I'm pleased to be able to report that North Devon District Council did meet that deadline. And from experiences in the southwest, where we have over 40 audits, only about 25% of our councils have delivered to that earlier challenging deadline. And I think that's probably reflective of the strong arrangements that North Devon has in place for producing complete and accurate and timely accounts. Now, when we do come to undertake the audit, what we do is we focus on risk. And within this plan, we set out the areas of greatest risk. But actually, any entry within those statements is subject to some degree of audit procedures. What you'll see on page 42 of your papers is we've just set out in a bit more detail what we consider to be those significant risks, and I was just going to spend a couple of minutes talking through those. So these significant risks are detailed in more detail from page 43 onwards, but essentially we have 4 main areas of focus. The first one is what we call management override of controls, and this is those areas of the accounts that are subject to the greatest degree of estimation and judgment, and where there are opportunities for management, should they wish to do so, to manipulate accounts. I believe my reflection is that the incentive to manipulate accounts in the public sector is significantly lower than in the private sector, when increased profits or overstating assets may be imperative to give a return to shareholders or get a bank loan. But nonetheless, there are pressures on delivery against budgets and the position. So we put a lot of emphasis into those elements of the accounts that are particularly judgmental. And one very easy way, should you wish to do it, to move money between accounts, or dare I say years, is journals. So a lot of work will go into journals testing, and we use some quite complex IT tools to analyze the population and target that, and that's quite a time-consuming exercise. Within your accounts, you have primary statements, and one of those key primary statements is your balance sheet. At the top of your balance sheet, you will have some very large assets in the form of land and buildings, and also investment properties. These are subject to a large degree of estimation. You use your own management expert in the form of a valuer, and we will spend considerable time gaining assurance over those disclosures in the top half of your balance sheet. Interestingly, you have that at the top of your balance sheet, but you also have a large liability. And I caveat that slightly, but you have historically, you've had a large liability in the bottom of your balance sheet in the form of the net pension fund liability. That has traditionally been quite significant, and that is calculated by the actuary on your behalf. And we undertake significant work on that because, once again, the main factors and variables that drive that calculation is subject to degree of estimation and uncertainty. It is interesting because there's recently been a triennial valuation of local government pension schemes. That was at the end of last year, and the results have only come out recently, and they're indicating a much improved position going forward, and that is being reflected in some of the draft sets of accounts that we're seeing. We're seeing much reduced pension fund liabilities, and in one or two cases, we're actually finding it flicking slightly, and actually some councils ending up with a small asset within their balance sheet, which is a bit of a novelty. So that will be the fourth area of focus. And that will take up a good 50% of our time on the post-statements audit. You will also see on page 42 that I talk about materiality, and that's a really important concept. We've set it at just over £1 million for North Devon District Council for this year. And what that means is that any individual line within any of your primary statements will be subject to enhanced audit procedures. And that really will take up probably 70% of our total audit resource in undertaking that opinion audit. The other responsibility that I mentioned, and it's detailed on page 53 of your papers, is VFM. And unlike the private sector, we look at VFM as well in the public sector. So an auditor of a company that makes something in North Devon, their auditors would be purely focused on the finances and signing off the accounts. Within the public sector, auditors are also required to comment on a council's arrangements for delivering value for money. And value for money means lots of things to lots of people, but for us, it's based on the NAO code, and we look at three areas. We look at financial sustainability, budget setting, monitoring, reporting, how you deliver against the budget, how you plan into the medium term to make sure you're sustainable. That is a particular challenge for councils at the moment, given the continued austerity. Cost of living crisis means ever increasing demands for services from your public, unit cost increases, pay pressures. All those make the ability of your finance team and chief officers to work together to balance the books particularly challenged, and we're really interested in how effectively that works. We're also interested in governance, so we will comment again this year in our value for money work on governance, and clearly that is a key role of this committee. You are those charged with governance, and we're interested in how that role is discharged and how you make decisions in an informed way. And then the third area is economy, efficiency and effectiveness. And that's a really broad area about how you deliver services. Do you do them in an efficient way? Are they effective? What are the outcomes? We've undertaken some planning in this area, and we have not identified any significant risks at the planning stage, but we will be reviewing each of those areas in due course and commenting on each of those areas. Suffice to say that when we've done this previously, we have identified areas for improvement, but they are at the margins and are about refining arrangements, and we have not identified any significant weaknesses in the past. So that just then takes me on to logistics, which is on page 54. And regrettably, we're not currently able to confirm a start date for this post-statements audit that I've mentioned. Up until quite recently, we were intending to start the post statements visit in the next couple of weeks in early July. But since then, our in-charge auditor for North Devon has resigned, and we currently do not have a replacement team to enable us to commence the visit. So we do appreciate that this is very disappointing, and I've been speaking with John and the finance team about this. Rest assured, myself and Roz are continuing to look for a solution to this, and we continue to liaise with John on the team and keep him abreast of developments. We've got another catch up with John and the finance team. We will be having one in early July, and I will make sure as soon as we do have a solution to that we do let the audit committee know. It's probably worth giving a bit of context here, because I did mention earlier that the deadline for you producing the accounts for 22-23 had been brought forward. Just as it's been brought forward for you, it's been brought forward for us. So we are tasked nationally with signing off our audits by the end of September. In reality, I will be amazed if very many nationally get over the line by that deadline. The previous year, 21-22, the deadline was the end of November, and I think 9% of audits met that earlier deadline. Interestingly, North Devon were one of that small minority, that small cohort. And interestingly, looking at the position regionally, there are a lot of councils with 21-22 or even prior year audits still outstanding. So I know probably over 50% of 21-22 audits are outstanding, but I appreciate that that doesn't negate in any way the need for make sure we come up with a solution for North Devon. It would be remiss of me just to touch on page 56 and the fee. I'm quite conscious that's quite a motive. So you'll see here that we are proposing a fee of 62k or just over for this year, which is a small increase on the 58 from last year, and that's driven predominantly by the introduction of a new auditing standard 315, or a change to that requires us to put and undertake more work at the planning. But clearly that fee is subject to completion of the work, and it's also governed by public sector audit appointments, who we have the contract with to provide the audit to North Devon District Council, and any changes or any uplift on the base fee, which is considerably lower, every year has to be approved by PSAA. That probably went on a bit longer than I planned, but I'm more than happy to take any questions on anything I covered, or for that matter, anything else in the plan.
Thank you, sir. I bet very useful report. Thank you. It's reassuring that you're in the top. What percent was it? We completed the audits. The pension liability, that's in our statement, isn't it? We can.
That's correct, Chair. I'll cover that off when I go through
It's a substantial reduction, isn't it?
It is, yeah.
Yes.
Yeah.
Great news. Any comments, Councillor Bushman?
I see the greatest risk here, although we see a rise in your fees, if you don't have a team to deliver on the contracts which the council has with you. Should we be worried as a governance committee? Can you? I'm seeking some reassurances here that you have this in hand, because we'd like to keep to the schedule. Quite obviously, this governance committee over the past 4 years doesn't like signing off on extensions internally or externally. I seek your reassurances, Peter.
Yeah, I mean, it's an absolutely legitimate question, and you're not the first committee that's asked a similar question, because we do have a number of audits that are starting late or are delayed. So, should you be worried? There is no penalty or anything that would affect the council, other than, I suppose, which is frustrating for us as well, is that you end up with, because audit is a retrospective exercise, if it's delayed a lot, you end up with your finance officers having to respond to queries for 1 year, 22-23, whilst managing the budget for 23-24, and then it gets to a point where actually they're planning the budget for 24-25. So you've got multiple years, and your finance officers being drawn in lots of different areas, and the audit is becoming more involved, and for both us and for your finance officers. And that is why there is massive slippage nationally in the whole audit process, because we have to spend far more time. and we cannot recruit sufficiently with people with the right skills to deliver it. It's more demanding on finance officers. Councils are having problems delivering this, and there is a massive issue nationally with timely audits. So we appreciate that's far from ideal for you, So there is no financial consequence. You could argue there's a reputational risk, but you're ahead of most councils at the moment. But I appreciate you want to remain there. And assurances from me. The only thing I can say, and I appreciate it's far from a perfect answer, is that we will continue to look for any solution we can possibly find to commence that audit as quickly as possible. But we do recognise that you need some clarity, and that's why I'm speaking with John and the rest of the finance officers about when that realistically will be, because we appreciate that, amongst other things, finance officers have got leave they want to take, and they're trying to time that to coincide with when the audit finishes.
You said there specifically that there was no financial cost to the council, but if your audit is in late, it will cost us more, because you said there's more pressure on our finance officer. I wonder whether in our contract, to try and protect us against us missing the audit coming in September, you might offer a reduction which comes in at a staged level for every day that it's late.
Perhaps John can discuss that.
Yeah, thank you, Chair. So I'm sure Peter will come into that. Our contract isn't directly with Grant Thornton, so the contract is let from the previously the audit commission, but obviously is public sector auditor appointments. They let the contracts to the firms. Obviously, that contract is then with Grant Thornton. Obviously, the work has been done. The accounts are produced. We're ready to go. Quite a number of authorities and others within Devon haven't produced their draft accounts yet. So some are working to end of June. Some I think are working to date into July. Which obviously then will change the resource pattern, obviously, with Pete and Ross and the team. So the discussion we're going to have at the early part of July is obviously when the Grant Thornton finish the NHS audits. We'll be discussing them about resources at that stage. If obviously there's other councils that were due to obviously have their audit started but haven't done their accounts, then hopefully resources can be looked at and redirected our way. So we've been engaging closely with Peter and the team. We had meetings this afternoon. We've got other meetings planned in a couple of weeks' time. So our drive is to get those accounts done. All of the notes and the work in preparation of the audit have already been done. The time takes, obviously, is when the audit takes place between the audit team and our team. So if that doesn't happen in June or July, it just happens a month later. There's no additional work. It's obviously the later it gets, that's then getting into the point, as Peter pointed out, when we're starting to prepare the budget for next year. And obviously, in terms of assuring you on the budget position and our financial standing for 24-25, I want to be in a position where obviously our accounts have been signed off, so that I can give you that assurance that our 22-23 accounts are signed off. Some authorities, as Peter pointed out, haven't had their 21-22 accounts signed off yet, and some haven't had their 20-21 accounts signed off. So we are much ahead of that, and obviously at least we can assure you on our current financial standing, whereas I'm sure their governance committees are probably even more challenging than what you're planning to.
But I'm sure the chair will join
I'll just say-
in thanking John and his team for making sure that everything is done in a timely fashion and is ready to go. Peter, I'm sure you will take on board our concerns for missing a deadline, because this governance committee, I'm sure, like the last, does not want to offer deadlines unless
Yeah.
really well
Through
justified.
you, Chair. Yeah, through you, Chair. Yeah, I would absolutely take that away, and I will. Just to respond to your observation about the fee reduction. Clearly, fee discussions take place between us and public sector audit appointments, and there are some very, very delayed and late audits, and that they've not attracted any fee reduction. I think that would probably scare even more audit firms away, and then we'd have an even bigger problem in terms of actually trying to resource up these audits. So I'm pretty clear that we won't be in reduction territory, unfortunately. My focus is on getting this work done as quickly as possible and finding a solution, because I appreciate it's not ideal at the moment.
Thank you, Peter. Thank you, John. And Matthew, Councillor Bishop, thanks for your two questions. I think we're valid, very valid. We are governments. We are being audited. Governments will be audited, and we're asking the right questions and the right time. Thank you. Yeah, and this is to note this report. Thank you. I think we're on to a rather short Couple of page report next, isn't it?
Yeah.
Agenda item 8.
Thank you, Chair. So members, agenda item 8, this came out a couple of days after the agenda was published, so you've got this as a supplementary item on your agenda papers, so you'll need to hit the top left-hand button of your iPads and close your documents and then go back into the supplementary document, which is agenda item 8.
I think there's a couple of hard copies in front of us.
Printed if anybody wants them.
Yes, very nice. First hands up, yes, one. Yeah.
I'm struggling with this.
Members who haven't found it, if you go back to your original page where you entered the governance committee, there should be a separate item on there called supplementary document, agenda item 8, which is a draft statement of accounts. Members have a copy, I'll check it. Thank you, Chair. Members, so item 8 is your draft statement of accounts for the year ended 31st of March 2023. You'll see there are 97 pages of them.
Yeah, sorry.
I did look to reduce them from the previous year. Not planning to go through all 97 pages, please know, but I'll just cover off the headline points so that certain page numbers and document. I will refer to the agenda page numbers. You can see at the bottom left-hand corner, you've got the statement of account page numbers where it says page 1 of 97. Obviously, in the middle there, you've got the agenda page, which says starting with page 5. That's the page number I'll refer to when I point you to certain points of the accounts. So as Peter from the External Auditors pointed out, the target date for publishing the audited accounts this year is the 30th of September. Last year, it was the end of November and had to for the last 2 years. That was post-pandemic, and obviously the extensions of the dates were put in place. This year, obviously, that deadline has been brought back by a couple of months, and likewise, the draft deadline to produce the accounts was brought back to the end of May. So we've already touched on the external audit of the accounts that Grant Thornton and the team will take place. We hope they will take place through the summer months, with the anticipated aim that their audit findings report will come to this committee in September. And then the aim will be that we have an unqualified opinion on the financial statements, which is a good opinion. That's what we're looking for when we receive the opinion in September. And then the accounts will then follow at full council a couple of days later on the 27th of September, hopefully for formal sign-off, subject to the audit having taken place. The first part of the accounts, which is around 10 pages, starts on page 6, is the narrative report. And probably out of all 97 pages, these first 10 pages really are, in my view, the sort of the story of the accounts. This sets the context in terms of the financial position. It sets out the challenges we face, how we aim to meet those challenges through the medium-term financial planning, and also reviews the last financial year. So if you are going to read one part of the accounts and you haven't read all 97 pages yet, those 10 pages probably are the most that give you the most valuable information. So the challenges that we face, and obviously the wider country is facing, is the cost of living pressures. Obviously, inflation rates have risen quite considerably since the last set of accounts that you had in 2021-22. The start of that year, in 21-22, inflation was at 2.9%. In April 22, we were up at around 11%, and that double-digit inflation continued through 22-23, peaking at 14.2% in October 22. And even at the end of the financial year in March was at 13.5%. A number of those inflationary pressures have been built into the budget ongoing for 23-24 that was approved by members, and also the medium-term financial plan. But with inflation still so high, we will continue to capture those additional costs over and above the budget position and feed those into the first quarter's performance report that members will receive in around September time. In the summer of last year, we introduced a cross-party workshop with members, and that was set up to identify options for mitigating budget pressures being faced prior to the autumn, when we normally would set the budget and start that budget setting for the following year. That started early last year and was really valuable in terms of members taking key decisions in advance of preparing the 23-24 budget. And it's something that we'll be looking to continue this year with our budget preparation for 24-25. And obviously it's something that we want to see cross-party with all member involvement. The financial statements in front of you aren't just for the last financial year, they are also forward-looking to 2029 with the medium-term financial plan. Starting on page 9, sets out a summary and a review of the year ending 31st of March 2023. Quarter 3 position in December 22, we were forecasting a small net surplus of around 19,000 against the approved budget. However, we have seen favourable variances in the last quarter since that reported position, most notably additional income from planning fees, a reduction in the temporary accommodation forecast costs that we originally set out in December. That forecast came in lower, which was positive. We also saw additional interest received from our investments with interest rate rises in that last quarter, which obviously do affect costs in terms of borrowing costs, but obviously seems a favourable return in terms of any spare cash that we're investing. And also we saw a larger receipt in terms of business rate income through additional business rate receipts and also a redistribution through the Devon-wide business rate pool, where additional growth in the business rate scheme gets reallocated through Devon and a share of that gets redistributed to Devon district authorities. We also saw some additional government grant income in the last quarter, where the council administered the council tax rebate scheme this time last year. Members will recall that everybody on the council tax base received a £150 payment that was administered through the council. So Sarah's team took that on board and paid out those significant number of payments to North Devon constituents. That was done within the majority of council resources, some additional extra costs. Those costs were covered and the government grant income far exceeded the council incurred, which again provided a positive receipt to the council. The chair, the final outturn position achieved was actually a positive net budget surplus of 693,000 compared to the original budget. This time last year, we came in with a surplus of around 600,000, so slightly higher than this time last year. And the table on pages 10 and 11 just sets out those variances in terms of how that figure is broken down across a number of the key areas. The movement from quarter 3, the main key areas that table picks out, we had some adverse areas of spend within benefit subsidy. So the amount of benefit subsidy that we managed to reclaim on housing benefit payments that gets made out. Where we're making payments out in relation to claimants within our temporary accommodation, that doesn't attract as much subsidy recovery from government as normal housing benefit. So that actually is an additional cost burden. That is mitigated by reductions in temporary accommodation and use of the temporary accommodation reserve that the authority set up. We saw a reduction in our pannier market income through the year. Obviously, the pannier market did close for a number of weeks whilst works were taking place. Some of that income was replenished through adopting traders within the Green Lane Shopping Centre, but we did see a slight decline in our income, and that's shown within the quarter 4 variances. Similarly, we also made provision within the 22-23 accounts for the Yelland appeal. This was an appeal to a planning commission that went through, and costs were awarded against the authority. Those costs are yet to be settled, and we're still negotiating to get those costs down, and also see whether we can attract some additional contributions from other stakeholders to those costs. And we're looking to reduce that figure of 151,000 that's shown within the accounts. The reason it's shown in the accounts is even though we haven't settled, there's obviously a significant ID outcome that we do need to settle those costs because the awards were made against us, and that's why I've had to make a provision in the accounts to show those costs within the 22-23 financial year. That's the key adverse variances. In terms of the favourable variances within the accounts, obviously we saw the lower level of benefit subsidy due to temporary accommodation costs. On the flip side, we reduced the forecast costs down by £99,000. So that actually offset and mitigated the recovery of the benefit subsidy figure that I touched on earlier. We saw additional planning fee income of £110,000 over and above what was originally forecast. And we saw an additional shared contribution from the crematorium, which partly is shared with Torres District Council. 60% of that comes back to this district council, and we saw £41,000 over and above what we originally budgeted for. The largest favourable variance was the business rates and the pooling income through the redistribution through the Devon pool. That yielded us an additional £400,000 over and above what we originally forecast from the business rates income. Our interest receivable receipts were £136,000 more favourable than what was originally forecast, and the majority of that was down to additional surplus cash we had towards the end of the financial year that was invested. coupled with the higher interest rates, and also due to the fact we didn't need to take on as much external borrowing, and therefore we haven't incurred those additional borrowing costs on the other side as well. And then most notably, the government grant income that I touched on in relation to the council tax energy rebate scheme yielded us an additional £180,000 worth of government grant income to the authority to offset additional costs that were covered within the sales scheme. Those costs, as I touched on, were nowhere near £180,000. The grant income obviously was received favourably and obviously goes to mitigate additional cost pressures that we saw within the year. So they're the main reasons for the additional variances in the quarter four part of the financial year compared to what we were originally forecasting in quarter three. In terms of the options for those balances, it's recommended that those monies are placed back into the council's reserves. In terms of the breakdown of where we look to place those monies, we're recommending that £120,000 goes back into the ICT Office Technology Reserve. That's to fund some additional capital business cases going forwards. Some of that is around data protection and backups and our recovery of data. And obviously we'll touch on ICT and obviously the threats of cyber, etc., and the importance of having our data backed up. So obviously these business cases are aligned to recommendations in terms of improving the infrastructure within the authority. We're recommending just over £200,000 going into the repairs fund, again to fund capital business cases coming forwards for repairs and maintenance for council assets and ensuring that those works are carried out over and above what was originally planned with revenue budgets. £80,000 into an insurance reserve to mitigate against higher insurance costs that we're seeing through our insurance premiums for 23-24, over and above that we factored into the budget. And then finally, the balance of £280,000 into the budget management reserve to mitigate against the inflationary pressures through 23-24. The budget management reserve will then have a balance of around £800,000, and that balance protects the council against those higher than budgeted inflationary costs in 23-24. This time last year, I talked about Green Lane Shopping Centre, and I think it's worth reflecting on that in terms of the financial statement this year again. This time last year, we'd owned Green Lane Shopping Centre for 4.5 months of the financial year. We purchased the shopping centre in November 2021, and the financial modelling that we put forward in the business case to members, those members that were at full council back in 2021, demonstrated that the revenue streams from the shopping centre would cover both the repayment of the loan costs and the asset management costs of the centre, and would return a contribution back to the council, which would then be looked to be used to mitigate any future risks on income volatility and investment back into the centre in the wider council budget. The financial outturn for the 21-22 year yielded a net return to the council of £243,000 for the 4.5 months. That was income less costs. And the majority of that was due to there was less borrowing costs within that first part of the ownership within those 4.5 months. The 22-23 trading position produced a net return of £291,000 once we've taken out borrowing costs as well. So again, it's a positive return for the council. It's in line with our original forecasting and demonstrates the viability of the shopping centre for that first full year of trading in 22-23. In terms of council reserves, the reserves at the 31st of March 2023, we have a general fund reserve of £1.238 million and earmark reserves of just over £11 million. And a breakdown of those reserves are shown in note 11 on pages 62 and 63 of your accounts. Those £11.1 million worth of earmark reserves includes just under £1 million worth of collection fund reserve. The reserve actually sits at 1.3 million. But around £1 million of that reserve relates to timing differences of where business rate relief has been awarded in 22-23 year, and that will come out over the next 2 financial years. So even though the reserve has 1.3 million in, around £1 million of that we know is going to come out of the reserve over the next 2 years. However, that does still leave just over £400,000 in the business rate reserve to mitigate against future volatility of that income to the authority. Those balances leave the council in a strong position moving forwards to deal with the risks and challenges it faces in 23-24. And it's positive members for council to be able to put balances back into reserves at the end of the financial year, especially after such a challenging year with the inflationary pressures we saw in 22-23, and obviously following coming out of the pandemic where we had the 21-22 accounts moving into last year. Just referring back to the narrative statement at the beginning of the accounts, and pages 7 to 8 just reflects on the future budget around the medium-term financial plan. Medium-term financial plan is refreshed annually and feeds in the service planning that heads of service bring forwards to members at committee in January. That gets fed into the budget and also then into the future budget plans. There is continued pressure and uncertainty on council funding moving forwards into the 24-25 year, especially as the original government fair funding review and business rate retention changes that was originally planned for this year, 23-24, again has been delayed by a further 2 years and looks like it's now going to come forward in 25-26. But again, the risk to the council is we don't know if that's going to happen or not. That makes financial planning into those years a lot harder in terms of realistic forecasting. The medium-term financial plan at the top of page 8 just sets out the summarised position. As you can see, there's a zero budget gap for 23-24, a predicted budget gap for 24-25 of around £500,000. When the budget was set in February, the anticipation was that we'd be seeing potentially the additional council tax receipts from a levy on second homes council tax coming in 24-25, which was going to yield potentially around another £400,000 worth of income. That looks like that's now not going to happen until 25-26. So the £500,000 budget gap 24-25 potentially will grow by then another 400,000. So in terms of those budget workshops and discussions with members for 24-25, having that early sit down with members and working through options to bridge budget gaps moving forwards is quite crucial leading into the 24-25 budget setting. You can see there's quite a significant budget gap then moving forward into 25-26, where that budget gap increases by about £3 million. And then that tends to sort of stay at that level moving into 28-29. The reason behind that is touched on the government's fair funding review and retention of business rates. The plans are that that will get reset when the government's fair funding review comes forwards, which at the moment we're anticipating 25-26, but it has been kicked down the road quite a few times to date. Certainly for the last 5 or 6 years, I've been here talking about the government's fair funding review and it coming forwards. At the moment, we've assumed for the financial figures that happening in 25-26, where a significant level of our business rates growth potentially will get reset and redistributed, and we will see a lower level of business rates retention for that first year ongoing. We have predicted a worst case scenario for that in terms of our financial planning, but it's important that we try and be as prudent and realistic with members so that members have opportunity to look at the budget working forwards in terms of looking at opportunities as to how we can look to bridge that gap. Obviously, the budget settlement we get for 24-25, we suspect will only be a 1 year settlement, so we won't have that certainty in terms of the future years until we really get into 24-25, and we tend to then understand what's likely to happen for 25-26. But it's important we flag up those budget headlines early for members so that those conversations can take place. After the narrative statement on pages 17 to 21, that just demonstrates and shows the legal performance indicators that we include within the accounts. That just shows performance indicators across a number of our service areas, and it shows data for each of the quarters for 21-22 and 22-23, and also the comparable figures for 21-22 year. The main statements of the accounts start on page 23, and these are really about 6 pages of the main statements, and the rest of the accounts really are notes and information to the accounts. So page 23 shows your comprehensive income and expenditure statements. For a sort of small business, this would be your profit and loss account. This includes a number of non-cash accounting entries that we have to show in terms of public sector accounts that are subsequently reversed out so that they don't impact the bottom line in terms of accounts taxpayer. So there are accounting entries that we have to show through the income and expenditure statements. They're reversed out through what we call the movement and reserve statements, which then is shown on page 25. So at the bottom of the income and expenditure statement, you can see a £59.5 million net income figure. Moving over to page 25, where you see the movement and reserve statement, you see that replicated on the right-hand side with the £59.5 million income and expenditure figure. The most important thing on this statement, on the movement and reserve statement on page 25, is the cash position that's shown on the left-hand side, where you've got your general fund balance and your earmarked general reserves, and whether those balances have changed at all. That's really sort of the cash wealth of the authority in terms of its financial position. But you can see the general fund balance on page 25, starting with 1.21 million at the very top, and at the bottom ended up at 1.238 million. So the general fund balance actually grew by about £28,000. That was due to an additional redistribution within the crematorium reserve. The earmark reserves ended up with £11.1 million. And then you have total general fund balance of those two figures added together. You have some capital receipts reserves, some capital grants that we haven't allocated yet, and that gives you a total usable reserves figure of 16.279 million. That's the cash reserves the authority has as its ability in terms of its managing its cash well. That's a slight reduction from 21-22, where it was 18 million. Main reason for that is we were holding on to some government grants money in terms of owing money back to government for redistribution of the business rate grants that we were distributing in 21-22. Some of those monies were held in our reserves, and then they're redistributed and paid back out to government through the 22-23 year. We then have some unusable reserves. The unusable reserves come to around £90 million. These are reserves that are shown within our balance sheets, but the clue is in the heading, really. They're unusable. They're accounting entries. It's where we show the other side of the entry to the pension liability. It's where we show all of our capital adjustments, and they are shown in order to show the balance sheet of its true wealth, but also they're not cash monies that the council has available in terms of spendability. That's the 16.2 million. Total of the movement and reserve statement on page 25 comes to 106.7 million, and then that should reconcile with the net worth in your balance sheets, which then on the next page, on page 26, you can see your total net assets for 106.7 million. The balance sheet shows the net worth to the authority, and Peter alluded to earlier in terms of the level of fixed assets and valuations that we have on council assets. They're shown at the top of your balance sheet, and as you can see, the long-term assets have grown from 120.7 million to 128.8 million. So that's an £8 million growth in terms of our long-term assets. Further notes on those are shown on page 15, on page 65 and 66 in note 15. The main reason for that growth of £8 million in our long-term assets is to do with revaluation increases. We have £6 million worth of revaluation increases where our property team have looked at our assets, revalued them, and the value of those assets has grown. That shows obviously as a positive within our balance sheet, and therefore is reflected within the property, plant and equipment line. You also have some assets under construction, where 22-23 accounts were being produced. The leisure centre was still being completed at the beginning of 22-23 year, it opened in June. So that was assets under construction, and also we're completing the water sports centre. So at the end of March, the water sports centre hadn't been completed, and therefore is shown as an asset under construction, and that adds around £4 million value to the balance sheet, 22-23. Some smaller spend on temporary accommodation and also within the Green Lane Shopping Centre. Depreciation comes off those assets, and that shows then the net increase of around £8 million on your long-term assets. Your current assets and current liabilities are then shown next in the balance sheet, and that breaks down cash and cash equivalents, your short-term debtors, your creditors. Normally we look at current assets and current liabilities together, and we add the two together and see whether that's moved significantly. Overall, it's about a £2 million increase in terms of net current assets. We've seen a decrease in our cash and cash equivalents, and that's because we repaid a lot of that business rate, the business grant money that was owed back to central government during 22-23 that we were sat on. But also we've seen a reduction in the level of creditors again, and that's the other side of the coin in terms of that transaction that we owed back to government at the 22-23 junction. But net current assets again hasn't changed significantly. Long-term borrowing figures are the same as they were at the end of 21-22, around £3 million, which was lower than we originally anticipated, which is positive because that meant we didn't take on any long-term borrowing at a time when interest rates were rising, and obviously we'll continue to monitor that in terms of our future long-term borrowing obligations. The key change really is the figure that Peter alluded to earlier, which is the defined benefit pension scheme liability. And that pension liability has reduced quite significantly from a £64 million liability to around 14 million. Probably the lowest that I've seen it in all the time that I've produced these accounts. That liability has fluctuated over the years. It gets revalued every 3 years. We have a valuation taking place every year. But this year, there's been some quite significant movements in terms of the valuation of that liability. There's been a change in the financial assumptions that the actuary have placed on the valuation. They use a discount rate that looks at all of the future obligations of the pension fund. So every officer that contributes to the pension fund, obviously we've got people that are on the upper age limit, like ourselves, and we've also got younger starters in the early 20s who will obviously be contributing for the next 40 years. The valuation looks at all of those contributions. It looks at the liabilities. It also looks at mortality levels and how long people are expected to live. And it takes assumptions in terms of what that future liability looks like and discounts it back to today's value. Some of those assumptions then change. And what we've seen this year is quite a significant change in the discount rate used. We've also seen changes in the pension increases assumption that is built into the forecasts. That's changed from 3.2%, it's reduced to 2.95%. The also salary increases have also decreased from 4.2% to 3.95%. And that discount rate used has increased from 2.6% to 4.8%. In terms of answers from the actuary as to why there's been such significant changes, the information we've received from them, there's a number of areas really. Some of it is linked to inflation. So the change in CPI inflation reduces the employer liabilities to a lesser extent. The estimated impact of financial assumptions have seen obviously that decrease in those pension liabilities. One of the significant changes is the investments and things what we call bond yields. They've increased significantly over the last 12 months. And because those investments and those bond yields have obviously been significantly stronger, and obviously interest rates obviously are linked to that as well, that has significantly decreased the liability forecast moving forwards. Assumed life expectancy for members has also reduced since last year. Not necessarily a positive story, but in terms of pension liabilities, obviously, you can always put a positive in every negative, I suppose, and that reduces the pension liability in terms of the forecast figure moving forward. So again, there's a lot more detailed explanation behind that I can go in, but that's really the story behind why those pension liabilities have decreased. Overall, in terms of the pension information, there are further notes on that shown in the accounts on page 9, on pages 87 to 93. That's in note 42, and that breaks those pension information down into a lot more detail. That shows the life expectancy, it shows the more information on the council's liabilities. Just to reassure members, though, that pension deficit is made good by increased contributions. So every 3 year, the valuation of the pension fund takes place. This authority then makes increased contributions to the pension fund over the following 3 financial years, and that is reassessed on that same 3 year cycle. And that will continue forever in terms of making good those pension deficits into the future. The next main statement on your accounts is the cash flow statement. That's shown on page 27, and that just sets out how we generate and use our cash and cash equivalents in terms of inflows and outflows of the authority. I won't go into detail in terms of that, but again, happy to take any questions from members. And then finally, your main statement on pages 28 and 29 is the collection fund. This just sets out our responsibility as a billing authority of how we collect the council tax and business rates income, how it's then shared and distributed amongst the major preceptors, and how it's then shared back to central government in terms of those obligations. That's the main statements of the accounts, which go up to, say, page 28. There's 97 pages in the accounts. There's still a lot more detail. But just to summarise, the next 20 pages are your accounting policies that start on page 30 and go to page 49. These are the rules and concepts in preparing the accounts. There's no material changes in those rules for 22-23, so I can reassure members there's no changes in how we prepare the accounts compared to previous years. And then starting on page 50, that sets out the notes to the accounts, and they're just disclosure notes that break down those main statements into a bit more detail. Where you've got information in the balance sheet for things such as your long-term assets and your fixed assets. These notes just break down those figures into a bit more detail if members want to see further detail. And those notes cover about 50 pages of the accounts from pages 50 to 100. And then finally, the very last page on the accounts on page 101 of your agenda is the draft auditor's report. We'll see that page is blank at the moment because obviously we haven't had the audit started, obviously as Peter was alluded to earlier. When the accounts come forwards in September, hopefully for final adoption, you'll receive then the draft auditors report and the opinion within the financial statements at that stage. So members, that concludes the whistle-stop tour of the draft 22-23 accounts. They're in front of you this evening for approval, but I'm happy to take any questions from members.
Visual.
Sorry, I let Councillor Walker go first. I've spoken enough today already.
Yeah, it's just, it's more of a, please can you pass on our thanks to the staff who yet again have risen to the challenge of providing a government scheme efficiently and in a very timely manner. Because I know of other people within a number of authorities who didn't have the £150 back nearly as quickly as we did. And it was really, really appreciated and we know how hard the team worked.
Thank you, Councillor Walker. Thanks, Sarah, who's behind you. Who's the main driver behind you.
Councillor Tom.
I'm sure John can, sorry. I'm not Officer Triggs, I was going to call you Councillor Triggs then. Happened too many times last term. Inflation, when we're talking about fixed rate debt, is a positive so far as the accounts can go. And also increasing our reserves increases flexibility of deciding whether we have internal or external borrowing. So far as external borrowing goes, could you outline the fixed rate or variable rates that we're paying and how they're being eroded by inflation?
So in terms of the level of borrowing, so the level of borrowing on the accounts is around 3 million. The need to borrow is obviously higher than that, so we haven't actually taken on that borrowing yet. The borrowing we did take on was taken on when rates were significantly lower. So a lot of our borrowing was sub 2%.
Are they fixed for a term?
They're fixed. So some of that is shorter term, some of it is longer term. There's a mixture of that £3 million loan. There's about 5 loans, I think, within that fix. And there's probably this one.
Yes, there's about 4 loans, some of them are 4 period plus, and there's a little more maturing in about 4 years, 3 or 4 years time. So they're all fixed for a period. Not what
We hope that inflation has come back down to a manageable level. Yes. And we have dropped it by perhaps 10% erosion of those debts. I don't know who I'm supposed to look at. Everybody's
There's
nodding with these numbers questions.
it's a calculation of the fair value of those loans within the accounts. So one of the notes in the accounts looks at fair value of the obligation we have and comparing that against a higher interest rates now. So the value of the loans is 3 million. Calculation of the fair value of those loans at 31st of March is actually what's the true obligation, because obviously if we get those loans out now, they'd be significantly more expensive. So the fair value of those loans is actually 1.8 million. So in essence, the credit to us as an authority by taking out those loans earlier and not taking them out now would actually cost us about £1.2 million more. So that's just on the 3 million. The flip side to that also is because we haven't taken on any more external borrowing, because we've been able to use our cash reserves and, as you say, use internal borrowing. That means that we're not incurring interest rates at a higher level. Does mean that we're not investing that spare cash, but that's significantly cheaper than the borrowing rates we would have taken on. And that's reflected within the saving that I talked about on the investment returns and the interest rates coming back. So as a credit to the authority, because obviously we're not taking on that external borrowing, and that's significantly cheaper and more cost effective than obviously taking on borrowing and investing in the spare cash, which will be obviously a lower rate.
Now, I understand that there is some potential to sell on loans which we have at a lower rate. What value is that borrowing at that rate if we were to sell it to somebody else? Or is it not of a value to us unless we have funds of internal borrowing which could mitigate the need for so much external borrowing?
It would be beneficial to us if we could. I mean, obviously, our internal borrowing we invest. Obviously, any spare cash and we get a return on that. The benefit of if we wanted to then sort of lend to other authorities isn't really there for us, because obviously they can borrow from PWLB just like we can. So unless we would look to mark it up and obviously profit on that, again, the treasury rules around that, which we have to be cautious on. For us, it's more beneficial just to in terms of borrowers to fund our capital liabilities, because we've got a capital finance requirement, which is around, I think, 20 million in terms of our need to borrow. So we need to fund that capital programme anyway. So either it will be through taking on public works loans ourselves. We're trying to minimise that by not taking on that borrowing now on rates are high. And any borrowing we did need to take on, we only do short term, because anticipations are that interest rates will come down again. At that point, we then look to take on longer term borrowing. But at the moment, it's more cost effective for us to return.
Long-term borrowing also relies on our own cash flows, and we're monitoring that in the moment, because, you know, potentially there would be a need for us to come out to people who are group this year and take on external borrowing. So in a sense, the loans we have now are such a good rate, we wouldn't want to, instead of losing those and take on a higher rate borrow. It wouldn't really be an option to ensure it's get out of the use.
Thank you, and I support the section 151 officers' stance to increasing reserves temporarily while we can, both due to the risk of borrowing and also the risks on future budgets money available. I think it's very shrewd, another brave step, I would say, along with the commercialisation and the borrowing to increase revenue generated from the capital spending.
I think we can go on. I think it's that's the officer taken on board. And I think that's as well. Thank you. Thanks, Greg.
Just go back to the Yelland appeal, please. And could I ask who the other stakeholders are who we are appealing to for contributions?
With the Devon County Council.
There's just one stakeholder.
Yeah.
Yes.
And that's because one of the reasons which we weren't able to support on appeal is the highway reason for refusal.
I see.
The Highway Authority, Devon County Council, provided the evidence to support that reason for refusal.
Yeah. So there's a good chance of getting contribution.
There's no legal there's no legal obligation on the county council to pay that, but at the moment we are appealing to their better side.
Thank you.
I mean, I think credit officers will try and get funds however we can, but this report goes to statutory and resources.
It doesn't, Chair, no.
Doesn't.
It comes here first,
Right.
adoption. It sits alongside the annual governance statement that's next on the agenda. Both documents obviously then go to be audited by the external auditors. So once you've approved both documents this evening, which are draft, Grant Thornton will then audit those financial statements and the annual governance statement, and then you'll receive a report back in September, hopefully. Subject to the audit taking place. If not September, then it might be a slightly later date. And then once you've received that report, then it will go on to full council for all members. So it goes straight to full council once you've received the auditor's report.
The reason I asked it is some councillors might question how you're going to spend the 690.
What does go to strategy and resources, Chair, is in a sense the story I told tonight gets wrapped up into a Q4 performance and financial management report. So that will go to members on the 3rd of July. That in a sense tells the same story that I've told in the narrative statement, and also asks for members' approval to place those monies into those reserves at that stage. So that's the formal approval of the money contributing in and out of those reserves. The members will see that strategy and resources. It also then goes to the Policy Development Committee, and then also goes to full council on the 19th of July for ratification. So all members will see everything then by the time it goes to full council.
Can I just see clarity on what's defined as employee benefits? Because I think there's is that the same as remunerations?
Yeah, the employee benefits is that's the pension.
Okay.
So in a sense, the pension liability we've got within the accounts.
Yeah.
The defined employee benefits in a sense is the pension that employees will then receive when they retire.
Okay. And then it would be helpful just to give a little bit of an explanation, because I know there's some significant changes around remunerations. Some people going down, some people going up, and some quite significant increases. But I might not necessarily expect to see in the public sector. I might have a chat with my boss in the morning, but it'd be good just to get a little bit of clarity on some of those movements.
Just the senior officer remunerations notes.
That's the part year movements, isn't it?
So page 79.
Yeah, I'm assuming that's part year salary.
So,
Wouldn't quite buy that much.
Is that why it looks so different?
Let our 1 officer.
yeah, so there are obviously some of those are part year effects. And so within 21-22, the chief executive implemented a new senior management structure. That's actually took effect from September of the year. So obviously, in a sense, the officer remuneration note shows those senior officer employee remunerations in that year. So in 21-22, it is only a part year effect. So as you can see, some of the heads of service posts you can see are about half of the value of what they were in 22-23.
Because of the position, because it's prior to that point.
It is so, and those obviously previously they were in positions below head of service. They might have been at a middle manager level. Those middle manager posts don't get shown within the officer remuneration notes because we only show those that are in the senior officer position. In 22-23, then you've got the full year effect of those remunerations. So it's not that we've doubled their salaries in 22-23. It's only a half year effect in 21-22 because they started those new roles in September 21.
Thank you very much.
Thank you. That's a very valid question.
I mean, I think there's some finance training coming up shortly.
There is, Chair. So
And by then you'll be experts in the SURA training to read this in detail, I'm sure.
Just another area of query if I can.
Yeah.
Just on short form debt on page 72. Just on clarification on what the other debts are. Obviously, I can't see previous years, but there's a steady increase in other debts. Be interesting just to understand what those other debts are.
this would be for other entities and individuals.
I must pick which page is on 22.
72.
Which is on page number.
The 22 at the top.
Yeah.
Yeah.
22, yeah.
So obviously other entities and individuals, so in 21-22 we had 5.7 million and just over 6 million in 22-23, so not significantly different. That in a sense is all of our sort of general debtors. So we show all of our short-term debts that are outstanding. Some of those are larger debts to central government bodies. That might be where we owe money back to central government due to distribution of business rate retention and things like that. The other entities and individuals will be all of our other sort of general debts. So that's any invoices we raise, quite a significant amount. But obviously that's things like trade waste debts, and it's a value of debt at the end of March. So some of our debts for the new financial year are raised in March. Obviously, when we run the report at the 31st of March, it will show as those quite significant level outstanding.
So that would be significantly less because of the.
What we would hope to see is when we then look at those debts through the year, you would hope to see significant debts being paid off then during April, May, June, etc. as we then progress through the year. But this is obviously a position at the 31st of March when those debts are actually raised in advance of the new financial year. We can provide a sort of more detailed analysis of those.
I was intrigued if it's something that's just steadily growing, there's £6 million we can go and find for still that.
Yeah, I mean, it's, we do show a breakdown of the age of our debts within the performance report that comes to members. So the report that will come to you in July, which will show the Q4 performance, you'll have an analysis of those debts over the various ages that are outstanding as well. And then obviously you'll be able to see the sort of the movement on those at that Q4 position.
Yeah, thank you.
Good. Thank you very much. And no more questions? Good. Very thorough review. Thank you very much indeed for that. Bruder,
Happening, mate.
all in favour?
Picture.
So agenda item 9. Draft annual governance statement. The governance?
Thank you, Chair. So we're back on the main agenda now.
And no figures, well, isn't it?
No, we're okay on this.
Yes.
Also no colours, and you know you said you like it's in black and white. So.
Notice. Yeah.
Accountants.
The annual governance statement sets out the processes and procedures in place to enable the council to carry out its functions effectively based on the core principles of the governance framework. The elements of our framework includes the work of the Strategy and Resources Committee and full council in setting budget strategy and objectives. The work of this committee with its oversight of governance issues, receiving audit reports and risk management, alongside senior management team, corporate risk group, internal and external auditors. The review of our governance arrangements has been supported by our internal auditors as a Devon Audit Partnership. They carried out 16 audits during the year. And as we've just heard, their annual opinion was of reasonable assurance that there was a generally sound system of governance risk management and in place. During 22-23, we made several improvements to our governance arrangements. This included the production of an annual equality report and a communication strategy, introducing a new suite of performance indicators, and improving the reporting of progress towards our corporate plan. We also rationalised the numbers of risks on our corporate risk register. However, there are still some areas that need improvement going forward, such as finalising our community engagement strategy, updating the procurement strategy, and improving our information governance. The full assessment of our governance arrangements can be found on your agenda. And as we've discussed, we hope the reviews of our external auditors will be included in the final statement in September. The recommendation is that the Governance Committee approve the draft annual governance statement. I'm happy to take any questions.
Councillor Bushell, you let me down.
I'm letting somebody else.
Yeah, that's
I can't carry the cat for everyone. Mr. Chair, are there any things?
No, you caught me out here.
I mean, you're here.
I'm going through the report. I can't see a lot of comments.
You've obviously read it all and you're well
I
prepared.
have
There
to.
must be at least one question.
I mean, the one I was about the complaints. I think we'd only had the ombudsman, there's 9 complaints this year. That sounds quite low. I'm not sure if you answer that, or the auditors can answer that. On page 70.
Yeah, I like that.
Oh, sorry, yeah, sorry.
No, that's absolutely fine, yeah, so I'm also responsible and feedback. Actual numbers to the ombudsman actually did, decrease. I mean, obviously, during COVID, everybody, was obviously not complaining about anything except when he was at home. Yes, I mean, the actual number going to ombudsman, are relatively low, bearing in mind how many we've actually, bearing in mind how many complaints we actually receive overall. And I think one of their, one of the pointers in your annual report was the speed that sometimes we then supply them with information. So that's something we've definitely taken on board, and that's something that actually once it reached that stage, we need to make sure that we're a bit faster and actually making sure the ombudsman have everything that they actually need in order to make their decision. But no, absolutely, overall it is a very low number.
Yeah.
Yeah.
Well, that's too many in some ways, but I think, I think so. It's a
Yeah.
big number.
Mr. Chair, do we know how many of those were upheld or abandoned? Because obviously a complaint to the ombudsman doesn't necessarily mean it was upheld. They may look at it and say, no, we're not investigating this.
No, only 2 were upheld. It was only 2, both out of waste and recycling out of the, it's about the 9, only 2 were upheld.
Very good.
And yes, congratulations.
Yeah.
Staff. Thank you.
That's the feedback team.
Yes, I'll feed that back to you, yes.
I will feed back to them.
Thank you.
Will they in turn feedback to us again?
They'll feed back to me and I'll feed back to you.
Thank you. We've got feedback.
So this goes to the, who was chair of this committee, so I'm sure he'll sign it off. We need approval. Approval, seconder.
What's happening?
Second one. All in them. Yeah. Good, thank you. That's good. Okay. Risk management model, that's.
Thank you, yeah. The risk management framework sets out a risk appetite, roles and responsibilities for managing risk, whilst the risk management model sets out the processes for identifying, assessing and addressing risk. It also sets out the risk escalation plan with the aim that a member of staff can raise the risk that, if appropriate, can be escalated to the corporate risk register and be reported to the governance committee. Together, these documents make up our risk management strategy. The internal audit reviewed these documents during the risk management audit in March 23. They reported that the documents were of good quality and explained the council's approach to risk. The recommendation is that the governance committee approve these documents, and again, happy to take any questions.
Any questions? Mr. Bushel.
So if you start on page 115, we've actually used colour in a little chart there. It's out of store.
I didn't have to print that page, so
Sorry, Mr. Chair.
I'm not going to comment. I'm not sort of question detail normally. Page 110. I think it might be a standard under 7 environmental assessments. I imagine that's a standard text that needs to be filled in.
It's a template, Chair, that we.
Yes.
Reports and, normally, let's say at that stage, we'd say whether an
There's
environmental.
no implications on actual
See,
station.
on this report, there wouldn't be an environmental assessment for a risk management. report.
Yeah.
Yeah.
I'd find something to say, so yeah.
Well spotted, Sherry.
10, so that's to approve. Can I sign to? Thank you. Secondary. All in favour? Good, thank you.
Sorry, I know we just done that. I did just
Clarification.
just for clarification, just on risk appetite. So risk appetite is defined as a score. Forgive me.
The risk register is coming up later, isn't it? I think so. Yeah, so. If you want to, I just want to cover it under risk register.
Well, that's fine.
If that's. Item 11.
Yeah, that's me.
Thank you.
And this is a standard report that comes to members, each committee. And it sets out progress on dealing with audit recommendations from the reports that you will see on the agenda. So the reports that are issued by the audit team often contain recommendations, and the high and medium level recommendations are contained within this report, all those that are outstanding. So the report itself is split into a number of tables. The first table sets out the number of high and medium audit recommendations that are in progress at the moment. And then Appendix B, I think it is onwards. These are the tables that always come to you. The first table talks about the audit recommendation, or sets out the audit recommendations that have been completed since the last governance committee. And just a point to note, the words in bold in the top of the column, latest note, it says postponed update as awaiting project plan to be signed off by new owner Jeremy Mann. Unfortunately, that's a typo. That's some wording that's been carried forward from a previous draft that was being circulated to officers, as is the sort of corresponding code attached to that. So the code is intended to refer to the one below that relating to section 106 agreements, and the note was provided. So that's the purpose wording check. Worried about that. So that table contains the recommendations that have been signed off. And probably the table that usually attracts the most debate is the next table, which is the outstanding audit recommendations, where heads of service have asked for an extension of time. And you'll see from this list that there are a number of them this time. We do try and keep them to a minimum. And significant efforts have been taken over the years to try and reduce the number of times that we come back to members with requests for extensions. The ones that are before you today sort of boil down to 3 or 4 main subject areas. The first one is around emergency planning. And a good example of that is the very first audit recommendation that's referred to there, 20 BC04, the testing of service resumption plans. And you'll see from the latest note that it refers to a tabletop exercise was scheduled to be undertaken with senior management team on the 5th of June. And this was an emergency planning exercise where we were going to go through what would happen in a different scenario. Unfortunately, the 5th of June, SMT coincided with strategy and resources. And so unfortunately, there's always less time for SMT on that particular day because members of SMT are at strategy and resources. So that exercise is being rescheduled for later this month when the emergency planning officer returns from holiday. As a consequence, and to allow time for the report to be produced and accepted by SMT, there is a request for a revision until the end of July, a short extension. The other main area where you'll see requests for extensions is in relation to ICT and cyber security. And you've got Andy and Sarah here tonight to talk about those audit reports which are contained in Part B. So it may well be that any questions you have on those particular ones, you wrap up with the questions on those audit reports later on in the agenda. The third one on your list there, that's also linked to the first emergency planning one. That refers again to the exercise that was due to be taken at SMT. Like I said, that will take place later this month, and so that one is also subject to a request to extend until the 31st of July. We then have a number of IT and cyber security recommendations, which, as I say, you may well wish to raise questions at the same time as there's a later report. Just going to a number of numbers. I'm not using I'm using a paper copy, so I can't tell you the page reference. I'll just get to it quickly. So on page 156 of the agenda, the last recommendation on that page is about the new asset management plan. And there's the next recommendation is also linked to that, which is that when the asset management system is in place, we'll implement a fully interfaced database. We have taken some progress with that, but you see that progress is fairly low at the moment. And predominantly that's because of resource issues in the team. The team itself, our property team, has been heavily engaged in purchasing temporary accommodation, heavily engaged in purchasing properties to support the local authority housing fund, which members have asked us to do, as well as engaged in major projects like Future High Streets, Seven Brethren redevelopment, and so on. We only have a limited number of people within that team able to do the work that's recommended in the report. But you'll see that training has been received on how to look at that management plan, how to deal with the management plan, and that needs to now be programmed in. And the recommendation is that be subject to a request for extension until September, end of September, Chair. There's a similar comment in relation to the condition surveys to be completed on all assets. There's been no progress so far in relation to that. That's a significant amount of work, and you'll see from the latest note that also that sort of covers the resourcing issues as well relating to a senior surveyor level. And we're still trying to fill those roles within the team. And for that one, because of the significant amount of work involved, the request was for an extension until April 24. We've then got a couple of recommendations in relation to emergency planning again, relating to the response plans. And overall, we sort of piggyback on the Devon emergency planning team and the group that's set up across Devon, and we adopt the policies and the plans that they adopt, because there needs to be some coordination across the county to ensure that we're all responding in the same way, especially when emergencies might arise across different districts. The recommendation was that we should have our own tailored plans. We do have certain plans that are tailored to us. So the second recommendation there refers to things like our own Operation London Bridge plan, which is the plan that swings into action when a member of or senior member of the royal family passes away. We also have our own rest centre plan and also our oil spill plan, which is relevant to Crookham Harbour, which is regularly tested. So we do have some of those plans, but there is a request to extend until December for the first one, and the 31st of October for the second one, to actually progress that and make sure that those risk registers and the plans are tailored to our particular needs. But that's not to say that we don't have plans in place. We do have emergency plans. We have our standby manual and a whole suite of other documents that would support emergencies as and when they do happen. And they are plans that we do use when those emergencies do arise. The next one, which is 22PO06, that's relating to car parking, and was a recommendation that the risk register be reviewed. That is underway at the moment, and so a short extension until the end of this month has been requested, a matter of a couple of weeks now, I guess. The next one is about reviewing the recruitment policy. And that's now been drafted and is with Unison at the moment for comment. It goes through a process within our internally, so it goes through the staff side, it goes through the Unison. And again, the short extension of time to complete that job is requested until the 30th of July. This next one, which is a recommendation about considering member involvement in the review of arrangements for safeguarding policy. It's at 0% at the moment, but one suggestion that would come forward, I think, is that there is talk about adopting a new lead member role for community safety. I think it was flagged up at annual council that that's a possibility, but there needed to be some further discussion amongst the group leaders and the groups as to who might be put forward for that lead member role. It is suggested that if we do go ahead with that role, that safeguarding is incorporated into the role of community safety lead member. We just need to make sure that there's space for group leaders and groups to have those discussions before we go to full council at the next time, at the next occasion, to recommend that lead member role be filled. And then the next one is around refresher training for members on safeguarding. And you'll see that we're 90% of the way there to completion. Training has been organised throughout June, and so the recommendation is for a short extension again until the 31st of July, just to allow time for that to be completed. The final one is a specific one relating to the leisure centre, the new leisure centre that was constructed, and relates to the screed depth around the pool. And it's transpired after the construction that it's thinner than was agreed as part of the contract specification. And you'll see from the latest note that it's anticipated that will be resolved with the contractor by the end of June. And so again, a couple of week extension is requested to allow that to happen, and that's when it's next to the end of the snagging period. Those are the ones that are outstanding, Chair. The next table, I can bring it up, refers to actions that are outstanding or completed that arise from the AGS. So the annual governance statement that you've just approved for this year, in previous years that's had some recommendations attached to it, and you'll see the table here shows which ones are complete and which ones are still in progress. And most of them are complete, and some of them are very close to being completed. But you will see there's a couple in there that are still being worked on at the moment, with due dates from one June this year and so on. So it's going to look at those, and none of them are overdue at the moment, so they were completed at that June. Recommendations, Chair, are that you note the progress made and approve the request for extension.
Thank you. Councillor Richmond.
Yes, Mr. Chair, with your permission, I would like for us to revisit pages 149 to 163, the extensions until we have concluded business during Part B, as I can't ask the questions I'd like to ask here. If the Chief Exec would like to go through the ones that he doesn't believe would have answers which cannot be given freely, with the public in participation, I would be happy for him to outline a few, if, or at least happy, for us to just move this to after part B. I'd be very grateful if you'd allow us to do that, Mr. Chair.
Chair, it's difficult for me to answer that without knowing what questions you can ask, and it's difficult for you to say what questions you can ask because we're in part A.
Is it,
They may be deeper the agenda, so we can take this up to part B.
I mean, are they mainly IT or the others queries you want to raise?
The ones that, if I may, Chair, the ones, I mean, it's pretty clear which ones relate to ICT and to the cyber security ones, I think. The ones that I've referred to verbally are the main ones, I think, that can be dealt with in part A. So I've gone through all of those ones individually.
So we'll park the ICT ones and discuss it in part B.
I just thought for the clerk, it might be easier if we just park page 149 to 163 and then we come back to that.
Yeah, can do.
Is that permissible?
Yeah.
I recorded this.
No.
So we can't be.
Okay.
Yeah, that's fine, Chair. You can defer consideration of this item until later on in the agenda.
Yeah.
After the part B's been there.
Okay. All in agreement? Thank you. Okay. Now, number 12, report by head of customer service, compensation payments.
Thank you, Chair. Yeah, so this is the report of all compensation payments made during 2022 and 23. I'll just go through some of the detail. So 7 properties who received a total of 492 of those for those 2 ombudsman cases that were discussed. The rest were just small amounts relating to ongoing issues. As you see, we had a baby seat that unfortunately got crushed because then somebody had put it on the driveway, and obviously there was typos, so obviously it was and 1 for trade, parking customer, and 1 planning customer for delays to their pre-application. The 29 customers under 4.4, that's a notional cost of £188 because their permits were just extended by a month or 2 to compensate for any missed collections that had been received. Overall, the actual amount compensated is around about the same as the previous year, so it's fairly consistent.
Thank you. Any comments? Mr. Bishop?
I'm guessing because there were only 2 amounts which were given back for missed recycling, when we have struggled with that department, and I think over the last few months, they've been picked up by the team and actioned the next day, which I think is as best as we can offer. What were the 2 £25 amounts for missed recycling? Was that just somebody who actually claimed? Is it something that other people could start claiming and therefore become a big risk financially to the
So
council?
just looking at those 2, those are both under stage 2 complaints. So that's where, so obviously the vast majority we resolve under stage 1. Unfortunately, sometimes they don't get resolved under stage 1, it goes to stage 2, and that's why for those 2, unfortunately, those didn't get resolved in a timely fashion, and so therefore, because it reached a stage 2 stage, if you like, we obviously offered a notional amount as a way of apology for those ongoing issues. It's worth saying that obviously the amount of issues we have with missed recycling, that actually only 2 resulted in compensation. The vast majority now are being resolved at stage 1, and I have to say that the actual number of complaints in the last 6 months for all waste and recycling have decreased dramatically. Their numbers really have come down, which is really encouraging. Obviously, not only for the crew, not only for customers, but also all that work in the background that obviously takes place with complaints as well. So yes, those 2 both at stage 2, and that's the reason why we would have offered at that stage as they weren't resolved in a timely manner.
Yeah, I can say that it's been an impressive turnaround from the recycling department of really their self-identification of things that are missed. So I would guess that Ken's going to tell us something about how the in-cab is working better and how the communication between teams and managers are better.
All I was going to say was, if members recall the corporate plan, and I appreciate that, you know, new members coming in haven't signed up to that corporate plan and it may well be reviewed. But one of the corporate priorities is around customer focus. And there's an awful lot of work that's happened and taken place within the council, both in terms of physical IT systems, like I said, the in-cab technology, but also in terms of attitude. And so the managers in waste and recycling in particular now try and deal with complaints as they happen, and will often ring the customer up as soon as a complaint comes in to actually find out what the problem is and resolve the problem there and then to stop the complaint escalating. Now, we would love to be in a position where we don't get those complaints and don't get those issues, but with 96,000 population, it's about 40,000 properties, which we're visiting each week, we are going to have issues. The test for the council is how we respond to those issues. And I think at the moment, we've got a different approach that's being promoted by Sarah and the customer focus team, and the programme of work that we've got under the customer focus programme, and it's starting to pay dividends. But you're right, Councillor Bushell, things like the in-cab technology, there's a lot of work that's gone into trying to improve that. The round remodelling that we've introduced, that's been introduced to try and ensure that the rounds have greater capacity and they're able to come back, not completely full, leaving, you know, the streets uncollected. So there has been a huge amount of work in there, and it's also tied in with things like the vehicle contract that you will recall went through full council. That's now starting to look, you know, provide us with an advantage in terms of younger vehicles and more reliable vehicles and so on. So the whole thing's coming together pretty well, but we're not complacent. We do have blips. I know a couple of weeks ago, or this week when the range were being modelled, it was introduced, we've had some teething problems, so we'll see a bit of a blip, but that'll soon settle down and we'll crack on with carrying out further improvements.
It's also worth saying, if it's okay, that our head of service for waste and recycling actually picks up the phone and phones customers back himself. You know, so he now demonstrates that at that level. I mean, all managers do. It is that change of culture without doubt. Massively.
And provisionally, could you congratulate the teams on the steps that have been made in the future? Only provisionally, because I don't want to see it slip.
Well,
Too much praise sometimes leads to complacency.
we have obviously have the summer imminently, and that generates a lot of extra because of tourists.
Yeah.
And so we know there will be some more missed in the summer. It is inevitable because you can't second guess sometimes where that extra is going to be, because it really depends on the tourists and etc. So I think it's fair to say Mark or any of us wouldn't rest on any laurels at all, as Ken says. But actually, as business as usual, if we can maintain these low levels, then actually when we have those exceptional times, we can hopefully step up a bit higher and do the very best with what are sometimes limited resources at times.
And obviously the council can help by promoting people to shop local, so there aren't so many Amazon boxes going into the cardboard waste.
So there's more pizza boxes in Seaside. 16 lorries went down, I think.
You can afford pizza in this day.
I'm not saying it's all pizza boxes. Thank you. Any other?
I'm just intrigued to know what has to happen to get compensation from this collection. To what extent?
It's
Is it just somebody that nags or moans a lot? You know,
It's really those ones that where we've said we will resolve it and we haven't. And we're putting our hands up and saying, look, we said we were going to resolve this. For whatever reason, we thought what we put in place actually did resolve it. However, you've had more missed. And so it is really putting our hands up and saying where we really have messed up. But I hope I can assure you that actually of the number of people that obviously started complaints at stage one, we're probably talking about a few hundred a year, to be honest with you, over a service that obviously 90,000 collections a week, it's going to generate a large number. I think that very fact that only 2 obviously ended up with compensation. It's worth saying, obviously, if we had not have done that, it may have been those people may have actually gone to the ombudsman, and then more money possibly may have been awarded at that stage.
It's cost, so there can be a cost for a complaint, we have to make a remuneration.
Yeah, absolutely. So on the report, so it's got there 7 properties received a total of 490 to compensate for this collections. 2 of those were those 2 ombudsman cases which were upheld, and that was a total of 300 in total for those 2.
That'll be officer time as well and stuff like that.
That's it, yeah, that's. I mean, stage 2 is so lengthy in comparison to stage 1. Obviously, why our aim is to make sure the vast majority, I mean, yeah, absolutely vast majority resolved at stage 1.
No, just, again, it's, I had needed to call customer services because, of a slight issue with, penny corrections, and, I have to say the staff dealt with it extremely well, and my green bin, which had been missed for a couple of months because, don't know why, and I suddenly realised it stank.
They do have them.
They came the next day and sorted it out, so, it is, stage 1 seems to be, most of things are sorted out. But a supplementary sort of question is, for the first 3 or 4 years of living in North Devon, I never had any paperwork after my initial approval of assisted bin collections. And I've now noticed that that it's now becoming a yearly thing where you basically got to sign to say that you still need this bin.
Yeah.
Is that helping?
Yes. Yes, because what we were finding is that people were signing up to it. And then obviously new people signing up every year, but then there was no reviews on the other end. And so there ended up being an awful what's marked as enlisted and collection of Bartek was actually it's a new family and they don't need assistance at all. So at one stage, I think we're up to about 600-700 in this, I'm sorry, 600 or 700 assisted. Whereas now, obviously, that's thinning right out and making sure that actually the people that need it get it, that actually it stops the slowness, because there will be people who are having their bin collected from their front door when there's no reason for it, and they can put it on the curbside, same as anybody else.
I've got assistant collection and I get this regularly. And it's often when the crew are on holiday and there's a relief crew going in. And the guy says to me, it's because they've got nothing in the county to tell them I'm assisted.
Yeah, so all assistants are marked on the leave have.
Yeah.
The thing is, obviously, those that always do the rounds know exactly where they are. They don't need to check it. And we do find when they are missed in general, it's because it's a different crew.
Let's jump out in the lane last week. You've forgotten me.
Yeah. No, it's unfortunately, it's not of all our missed, I would say it's a high proportion of unfortunately assisted at times.
Can I move along? One final question. One final question. Joan, your question.
No.
No, good. That's just an update point. Thank you. So we're on to number 13, work programme. I'm conscious of time, so I'm going to try and move this along a little bit if we can, as much as possible. Who's presenting?
This one here, there's nothing.
Just a note.
If there are any changes that we needed.
Right, okay.
You can just note it as it is.
Okay. So this is the plan of reports that we will receive during the year. I'm sure it's a live document during the year. If we want something the following meeting, you can just.
It is, Jen. These are the standard items that come to you on
Yeah.
a regular basis at particular times in the year. It can be changed anytime. Each cycle is up for debate, discussion, amendment.
So perhaps in the future meetings, if you want anything, we can debate whether you want to future report or something. Can we accept this? Noted. All agreement? Right. Moving on to part B.
we need to, I'll have to just stop the meeting
Meeting.
on the recording.
Yes,
So we just need to motion a second and agree to go into part B. I'm going to stop
right.
recording so that we're not actually.
Okay.
Okay?